Hey everyone, welcome back to the channel. It's Monday, April 7th, 2025, and what a way to kick off the trading week. I'm Stock Market 101, and today we're breaking down what moved the US markets and what traders should be watching heading into Tuesday. Whether you're holding long positions, actively day trading, or just following the macro trends, this recap and outlook will keep you one step ahead. Don't forget, if you find value in these breakdowns, hit that like button and subscribe so you don't miss the next forecast. Let's jump into the numbers. The major indexes posted a mixed performance today. The S&P 500 closed slightly in the red, down about 0.3%, dragged by weakness in tech and real estate. Meanwhile, the Dow Jones edged higher, up 0.2%, boosted by gains in healthcare and industrials. The Nasdaq Composite fell over 0.6% as high-growth names took a breather following last week's surge. Sector snapshot: energy was the clear standout today, thanks to a pop in crude prices following new OPEC Plus comments. Financials held steady, even as bond yields ticked lower. Tech underperformed, big names like Nvidia and Meta gave back some recent gains. So, what sparked today's action? 1. Fed chatter remains front and center. This morning, comments from Atlanta Fed President Raphael Bostic spooked markets a bit. He pushed back on the idea of a rate cut in June, saying inflation remains too sticky for comfort. That took some wind out of the sails for growth names. 2. Economic data. Light today. We didn't get much on the data front. The big one this week is CPI, coming Wednesday. Traders are already positioning ahead of it. 3. Crude oil jumps. West Texas Intermediate climbed above $89 a barrel, hitting a 5-month high. The energy sector rallied on the back of renewed supply concerns and geopolitical tension out of the Middle East. 4. Earnings season is creeping in. We're just a few days away from the big banks kicking things off. JP Morgan, Citigroup, and Wells Fargo all report this Friday. So today, we saw some positioning in financials ahead of those numbers. Alright, let's talk about Tuesday's game plan. Here's what's on my radar. 1. Small Business Sentiment Index, NFIB, drops at 6 a.m. Eastern Time. It's not a blockbuster report, but traders watch it for signs of stress, or confidence, among Main Street businesses. With inflation still biting, any shift in sentiment could sway market tone early on. 2. Fed speakers continue. We've got Fed Governor Lisa Cook speaking in the afternoon. With the market pricing in 2 cuts by the end of the year, every word from the Fed matters. 3. Volatility watch. The VIX closed today around 14.8, still relatively calm, but traders are starting to buy protection ahead of Wednesday's CPI. We may see a little hedging pressure continue into tomorrow. 4. Rotation watch. Keep your eye on value names. If tech continues to fade, we might see money flow into dividend-paying sectors like utilities and staples, which held up nicely today. 5. Earnings preview trades. Financials could see some more front-running ahead of Friday's reports. Watch options flow in JP Morgan and Bank of America. Here's how I'm thinking about the next session. Overall sentiment, cautious, with a lean toward risk-off. Traders don't want to be too exposed going into Wednesday's CPI print, especially after Bostic's comments today. Index forecast: S&P 500 could trade flat to slightly lower unless we see a surprise catalyst from overseas markets or Fed speak. Dow might continue to grind higher, especially if energy and industrial stay hot. Nasdaq likely stays under pressure short-term unless bond yields pull back more sharply. Key levels I'm watching: S&P 500, 5,200 remains the key psychological level. If we break below 5175, we could see some selling accelerate. Nasdaq, 18,000 is a major support zone. Dow, 39,000 looks like solid support, with resistance around 39,450. Sectors to watch: energy, may have more gas in the tank, pun intended, with oil trending higher. Financials, look for pre-earnings setups, JP Morgan, WFC, and Citi. Semiconductors, watching to see if they bounce or break. This group has been leading for weeks, and any weakness could be meaningful. Bottom line, Monday set a cautious tone, and that mood might stick around until we get the CPI numbers on Wednesday. The markets had a big run this year, so don't be surprised if traders use any excuse to take some profits off the table. If you're trading tomorrow, be nimble. Watch the bond market closely, stay tuned for Fed comments, and keep an eye on rotation beneath the surface. It's often a clue before the indexes react. As always, stay sharp and protect your capital. If you got value from today's breakdown, drop a comment below with the stocks or sectors you're watching. I always love hearing what's on your radar. And don't forget to like and subscribe for the next update. Catch you tomorrow. Good luck out there.